is, in my opinion, uh, in the second row. Why? What do you really want to have? Do you want to have a smart ascending profit line with the hit of or your yearly target, or do you want to sit in trades, make profit, go down and up, then you make a home run and then back down, and at the end you hit the profit target for the year 2? The difference between these two situations, or these two P&L graphs, is, in my opinion, that in the first situation, in that one here, I want to have, and I really like, the strategy is not so important, but the opinion you have about the market bias and the market direction is really, really important. So I want to see if the market is moving sideways, it's trending up, or it's trending down. Because if I know in which way the market moves, or if he will not move, my setup is clear. I go long in an ascending uprising market, I go short, only short in descending falling market, and I go short at the top and long at the bottom of a range market to trade to the mean. So think about it. You are really perfect in describing the market situation. Short market, sideways, long market. How important is your strategy? I mean, risk management is important, okay? Yeah, you don't want to get hit with one trade in your stop loss for your yearly or your monthly account limit. But how important do you think it is if the market's rising up? And I'm telling you, in 6 months, the market is $10 higher. What do you think how important it is if you get in here, 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 or here? Every time you have the wind in your back, and you know that in 6 months or 6 weeks, the market will stand anywhere above your entry. And that's the reason why you get, for every market, a simple, really a simple strategy. For a long market, a simple strategy. For a sideways market, and a simple strategy for a falling market. And with that thinking and that simplicity in your strategy, you will have a simple strategy for the long, short, and sideways market, and you will get the smooth ascending P&L profit line in your graph, because your strategy is adapted to the market bias and not to yourselves and your thoughts. In the second example, that one here, someone is playing the trades, or is playing the market with one strategy, but a perfect one. He developed years to get to that strategy, and he needs so many energy to trade this strategy day in and day out. And the reason why we get a fallout here 2 times is that the strategy only works in a long trend or in a falling trend, but not in a sideways market. So the perfect strategy is nothing if you don't look at the bias of the market. And now the second important thing for me is, how do you want to trade day in and day out if your energy is limited and you have a big, important and very, very difficult strategy? I can tell you that you have to make many breaks, or there will be the time that you will fall into your unconscious trading and will lose a trade or will get lost in your deposit. So I draw you a graph where you can see a simple strategy, a high difficult strategy, and here you can see you know how the market move, and here you don't. You will get a smooth curve that looks like that. So the more you know about your market and the trend or the sideways market, so more simple your strategy can be, and you will make money. The less you know about your strategy, about the market and the trend, the more important is a good strategy. I hope that helps today and gives you more insight about the thinking about the market and how you can trade in and trade out and make profit and over years, and you will adapt your BS and your trading over years. Thank you.